GameStop surges after fetching 933 million from stock sale. Guys, this news has sent shockwave on Friday, just before market close, or after market close. I was asleep when this news came out. This is GameStop Corporation. By the way, this is part 3 of the GameStop trade. I'm going to tell you in this video where GameStop is headed and why this news is huge. Now, when we said there is going to be a stock offering, share offering, we didn't know it was going to be this soon. We thought in the next leg up of this crazy frenzy. It happened now. So, speculation is coming about. What's going to happen next? Because GameStop did not actually need the money. They already had 1 billion on their balance sheet. Okay, total cash 1.2 billion, but now of course for 2024 it's around 1 billion. They already had 1 billion on their balance sheet. Why do you need another 900 million? This will probably be around 920 million after paying expenses and whatnot, or 25 million. But 45 million shares have been sent into the market. I'm sure somebody bought them somehow. And that explains the actual drop in the price the last couple of days. And you notice where we are today after the offering. We're about $21, just right before this resistance on GameStop, at this resistance right here. We shot up to 23 and then bounced back down. But we're sitting right now nicely at 21.40, just right at this resistance. So the next couple of sessions, you're going to get some retracement and then a breakout. Okay, back to the $26, $30 mark, which is this gap that needs to be filled, $31. And maybe you end up over here at $39 by the earner report. Now, I'm not here to tell you about the chart and what's going on with the chart, but while I'm here, let me show you what's going on here. The put-call ratio, there's a lot of short stock. It's 1.40, which means a lot of people are bearish on this trade or on the stock. After this news, this bearishness needs to disappear. And you notice long term, the put to call ratio is coming down, so there's now more people becoming bullish. Like guys, this news is so big to a point it's going to close out a lot of short positions in the near future. If you guys keep it up, and there's a reason to keep it up, and I'll explain all of that in a minute. But it's time to close out the swaps that are on GameStop, the put options on GameStop, and the live short interest, which by the time it loads, I'll show you. And the reason behind that, and like I said in the first ever video when I said I'm buying GameStop because of the fundamentals and the future growth, well, this is the moment that I was waiting for. I was waiting for GameStop to start its acquisitions and GameStop to stop being GameStop. A lot of people are betting that GameStop is just betting on GameStop and you know, GameStop to be this profitable reseller of games and consoles. No. This is the past of GameStop. The new age of GameStop is to be GameStop's holding company. And that's what we're buying GameStop for. And that's the direction we're heading. Because this share offering, what it has indicated is that there is an acquisition coming. And I'm going to share with you the paths Ryan Cohen, the CEO, can take. This isn't just about you know, taking shorts and squeezing them out. This is a different ball game now. I said the shorts are going to get closed out automatically. And it's not just this 20% short interest. No, this is the put options. This is the institutional money that's coming in. Screw the shorting, guys. Screw the short squeezes. That's long gone. Now it's about growth. A stock that's beat down so much, you've got swaps on it. If that's true, those swaps will have to close early because the game is changing. The fundamentals are changing. This here is peanuts, the 20% short interest. Let me tell you where we're going now that we have $2 billion in cash for GameStop. Okay, you've got $2 billion cash for GameStop, or 1.9 billion. You did not need 1.9 billion. The current value of GameStop, that means has to change, the valuation. The guy who has $6 ratings on it is now has to upgrade. So there's one more catalyst coming, an upgrade of GameStop. He could put it to $8 because he's petty. We all know GameStop's value is not $8. Okay, so it goes from 6 to 8. Well, this gives us a push anyways to the upside. But $2 billion cash makes GameStop's valuation higher than what it is now. If the guy was a 6 and we only had 1 billion in cash, now we have 2 billion in cash. So the valuation has to change. We've got double the amount of cash. There's avenues GameStop can take. So let's start with the first one. Payment or debt payments, closure. If you choose to just pay off the debt, which is 600 million, your monthly repayments will basically, they used to put a pressure on your overall net profit for the month. Your monthly repayments can automatically reduce the cost. That's what most people do if they want to reduce the cost instantly. Most companies, they will just pay the debt that they have outstanding. In GameStop's case, 600 million. If they pay 50% of it, that will reduce the cost of what's basically their net loss is going to get better automatically. Now let's say they go and use 300 million to pay down the debt, and then they use another 600 million to take out or buy a stake of a company. So there's avenues to acquisitions, guys. It's one, you buy a stake, usually that's 10%, okay? 10% in a profitable company that's generating you revenue. Automatically you're getting your cut of 10%. If they're generating 100 million a month, you're getting 10 million in revenue automatically a month from this other company. Okay, now that's just a 10% stake, and your valuation will increase automatically. So buy a stake, that's one avenue. Second avenue, you're going to actually acquire shares in companies. So share acquisitions or buying shares like we do. It's just to have in a portfolio. So now GameStop becomes a holding company that buys shares. So share acquisitions, buying Bitcoin. We don't know what they can do here. That's 600 million they could use. They can buy bonds, okay, to generate them revenue while still having cash on their balance sheet. Okay, so they could use that 600 million for investments, and it's coming. And 4 is going to be invest in your own company. You can buy your own shares, okay, or you can look to improve your own company or look to build a segment within GameStop. I think what makes sense after what they've released the last couple of months, giving Ryan Cohen access to the company's money, to invest in the company's money, is one of these 3 things. Buy a stake in a company, share acquisitions, or buy Bitcoin on your balance sheet, or bonds. The whole market is expecting this, guys. This is what we've been waiting for. Like, you do not dilute shares for no reason. There needs to be a reason to dilute. They've already diluted before, and they have 1 billion in cash. They could have used that 1 billion, but they didn't. They said, let's have this 1 billion as a backup for our company, and let's dilute, and let's use that money to improve our financials, our fundamentals, or look to grow the business. Okay, so even without the acquisitions right here, we know they have 2 billion in cash. That makes the valuation of GME better than what it used to be. So the share price needs to be at least over $15. Okay, that's the fair value, I assume. I don't know, I haven't done the calculations, but I assume over $15. Some of you forget that GameStop in 2020, guys, even with what's going on with its share price, let's have a look. In 2023, they've actually traded over $20 for half of the year. Now, I don't know what happened the other half of the year after 2023, but they've traded over $20 for majority of it. And that was without the current cash that they have. So I think what's going to happen is that investors now, they know there's an acquisition catalyst coming or an investment catalyst coming, or they're going to announce that they're paying off their debt. I think now the buying pressure is going to begin, and is going to put pressure on the short positions, because even the short positions and those betting against GameStop to go bankrupt, now it's going to take them at least another 20 years if they stick to the same game plan they have with the capital they have to run out of money. Okay, and we know they're getting better with their costs, or managing costs, and they're cutting costs. So they're going to turn profitable. I assume if they pay down the debt, I think they can turn profitable if they pay down the debt, 600 million. GameStop can turn profitable at the way they're going. And now they have another 300 million they can use to buy shares. So the catalysts that are coming, it's just good news, guys. And automatically shorts are going to close their position. I'm not the CEO, so I don't know. I can only assume and predict, and that's what I'm doing. Anyways, Friday is something that we've seen market close. We ran up 13%. Actually, we ran up 25%. But we ended up closing at a good level. Like I said, this was the resistance, 21.50. Tuesday, I don't know what's going to happen. We could have a retracement back to $20, $19.80, and then back up. Or we just open up higher at $25 over the resistance. And then we continue back to the $30 and so. And you've got the annual meeting, and you've got the earnings report in June. So there's a lot of great things, guys. If you want Part 4, I think that's it, guys. I don't have anything else to say about GameStop. Part 4 is going to be us celebrating, and I'm going to be dancing here on YouTube once we make our bag, and it's going to be big. So that's me done. Smash that like button so other people can see it. Share it everywhere, and I'll see you guys next time. Bye.